Welcome back. There's a lot to discuss on Quant, so please stay tuned. Start by liking, subscribing, commenting, and sharing this video, and we'll dive straight into it. Well, point of interest for us over the last few days has been this wick low. We've seen how previously we lost it and reclaimed it over here. This gave us a bullish bounce until our area of resistance, which we were calling out on the channel, being us topping out at around $92.40. We can see that we didn't get any closes above $92.40 over here. This was actually just 92 on the dot. So yeah, we're seeing that area between 90.75 and 92.40 is being held up very nicely as resistance. And then we got this rejection where I tried to explain over here in the past. I think this was maybe in a mentorship session where we had a dump down from here, but as he didn't lose this wick, you've got a chance to reclaim that support, and we did in that green candle, but failed to break through that $92.40, and eventually coming back down to test this, and we of course lost that support, and we came down to the golden pocket over here. That was all lost. The reversal wave had been created, but we can't just solely rely on the Fibonacci's rules. You have to look at other things. So just as we created this wick level of support over here, if we want downtrend continuation, yes, we would assume that the reversal wave is created on the loss of the golden pocket and a push through the 786 to show us bearish targets to the downside. However, there's more to it than just preparing you for the bearish targets and saying that it is a reversal wave. We need to look at the key levels of support. Have they been lost? Have they been retained? If lost, we continue to target. If retained, this is why we're getting this pump up right now, because we created this wick low. What we need to see is bodies closing below $84.54, and that's how you get your continuation to $79, $81, and $82. If we do not close a 4-hour candle, this is the 4-hour, not daily, 4-hour body candle close below the wick, you're still holding this as support. You consider this the bottom, and we're at least getting this short-term pump. But as we were just mentioning previously, we got a key area of support. We had a loss of that body candle, so that just signals a dump to the wick. We didn't even manage to get to the wick, and then we reclaimed that body, and that's why we continued higher. So this is just showing that this is a key level of support in the past. We've had a wick rejections from there. So my assumption is that if we ever get up into this price point of $88 to $89.50, then this would be an area of rejection. So for me, I'm watching this level. If it can be reclaimed, it's one more time into that key level of resistance, which is where I rejected at $92.40. For me, we need a break above $92.40, and you can see that with this double failure to lose support here, creating a double bottom. If we were to reclaim this level and then break out and close above $92.40, then we've got a massive double bottom over here, and it'll just mean short term up. Because if you've been following along with the videos over the last week, you'd know, if we go back to the daily time frame, there's a lot of resistance in the way over here that would just signal, even if we had this double bottom, it would work in the short term, or not really at all, and then continue down. So all in all, we're getting this short term bounce into key levels of resistance, still looking for continuation lower than where we are right now. So anything changes, I will be here to update you guys. Otherwise, I will catch you on Monday. And that's it from me today. So if you want to do the mentorship, the course, or the chat, just hit the links in the description down below. Take you to Twitter, where you can private message me for more info, or you can just head over through the website. Again, there is a discount for the next 2 people on the mentorship, so private message me for that. It's not applied on the website. Cheers.